Thank you, David. So as David already mentioned, we've split the presentation into 3 parts, which will be presented by us. So I'm happy to start with Helaba Invest's view on the investable product and manager landscape across different markets, so globally for real estate private debt products. I guess I must not tell you much about the real estate private debt history. I guess you all know the history, so I will only spend a few minutes here. Nevertheless, what I would like to highlight is that the US real estate private debt market is definitely the most established market with a history that dates already back for approximately 20 years. On the other hand, we have the Australasia market, so the APAC region, which is the youngest real estate private debt market with especially significant growth rates since 2020. In between those 2 markets, we do have the European market. The European market basically had its inception after the global financial crisis with significant growth rates thereafter. However, as you can see here in the frequent data, so in terms of assets under management, but also which is reflected by Helaba Invest's long list, that we have seen a recent decline in the market. So in terms of investable products, these have reached their peak in approximately 2020 with approximately 80 investable products in Europe, which have declined to approximately 70 investable products by the end of 2023 and approximately 60 investable products as of today. When? Yes? Of course.
So I'm wondering, what is the reason why the investable universe or long list has actually declined most recently? Could you give some indication?
Yeah, I guess there are certainly some products which have been retracted from the market. So I guess there are less product launches currently. The market environment is challenging in terms of fundraising. So there are managers who certainly have difficulties to launch funds and to successfully fundraise those funds. So there is some decline in the current product universe.
Great, thank you.
So now comparing the product range across the 3 markets, I would like to point out 3 main differences. So at first, the most obvious difference across the 3 markets is the target fund size. So in the US, we see the largest real estate private debt funds with an average target volume of 1 billion euros, which is followed by Europe with approximately 750 million euro target volume. And last but not least, the smallest funds are currently launched in the APAC region, with approximately 610 million euro target fund volume. The second main difference